skincare brand Ras Luxury Skincare has raised $5 million in a Series A funding round. It was led by Unilever's investment arm, Unilever Ventures, and also saw participation from Amazon Sambhav Venture Fund, among others. Now, Ras will leverage the fresh capital to expand its retail footprint. It also plans to focus on exclusive brand outlets and shop-in-shop retail, with 50 more pan-India exclusive brand outlets planned in the next 3 years. For more on this, I have with me the founder and CEO of Ras Luxury Skincare, Shubhika Jain. Shubhika, thanks very much for your time here on Startup Street. Very briefly for our viewers, tell us about Ras, why you started it, and the luxury skincare market in India. Quite competitive there. How do you differentiate yourself? What kind of market share do you hope to capture?
Sure. Thank you so much, Ritu, for having me on Startup Street. I feel really honored to be here. So Ras is India's first farm-to-face luxury D2C skincare and wellness brand. The vision is to be the #1 luxury skincare brand in India and go global. And our mission is to improve the health and wellness of our patrons via effective, clean, natural beauty and skincare products. So we raised this fresh funding from Unilever Ventures and Amazon, along with participation from our current investors, to improve our offline EBO presence, do a lot more in our marketing and branding efforts, launch more innovative R&D backed products, and grow.
All right. If you could detail a bit more on how exactly you're going to deploy this capital, will most of it be used for your offline expansion, or how do you plan to allocate it?
So we've been growing, we grew 140% from the previous year now, and we plan to kind of now B2C makes up more than 50% of what we do, and we plan to grow more in the offline EBO presence, with also growing in an omni-channel way.
Okay. Well, tell us what your plans there are, because, you currently have 2 exclusive brand outlets, as we understand, and those 50 more that you've planned in the next 3 years, and D2C channels contribute 50% of your revenue. So how do you see this revenue mix evolving as well with the offline retail expansion plans? How fast is online growing?
Sure. So I'll tell you a little bit brief about when we first got our funding from 6 Sense 2 years back. So that time D2C was around 90% of our business. Now it's moved more towards 50%. Yeah. And we see going forward, this 50% is going to come down to 40% or 35%, with more emphasis coming from offline channels, EBO, shop-in-shop, and also Horeca and other B2B businesses that we are doing. So that's how I think this is going to come through.
Could you give us a sense of, since you're a relatively young company, 140% compounded annual growth rate in the past year, but what are you doing in terms of monthly sales? Where are your revenues overall currently at? And at what pace is business growing?
So business is growing at a crazy pace. We are just about to reach to 100 crore ARR in this coming quarter. And we believe that we hope to kind of clock in 100 crores of revenue in the coming fiscal year.
Okay, could you give us a breakup of where this 100 crores is coming from? What are the fastest growing verticals? Because you're also going to use some of this money to get into new product lines. What are those? So give us a sense of, where you're raking in most of the money.
So honestly, if you see EBOs, right, we are pretty bullish on that, EBOs. So we believe almost 20-30% of the money will go on that. A little bit of it, around 10 to 20% of it, will go into R&D to develop new product lines which we do not have, say hair care or more in the face care or in the beauty space. And a part of it will go into marketing, improving the brand pull, and also building the stellar team, so that we're able to get that kind of talent on board. So
all right, Shubhika, before we let you go finally, go ahead.
No. So even marketplaces, for that matter, we were speaking about quick commerce before I came in. So quick commerce is also contributing a good part of our revenue. Nykaa, Tira, Amazon, Flipkart, and a lot of these other channels are obviously contributing a healthy part of the revenue. And the rest will come from the offline. So it would become somewhere close to 20 to 25, where it currently is close to around 15.
Shubhika, before we let you go, where do you see the brand? How do you see it evolving in the next 5 to 10 years? Do you have any global ambitions as well, now that you have Unilever's investment?
Yes, we're super excited about that. And definitely, even the day we started, we wanted to make this brand a brand from India, which is authentic, a global brand. So we definitely have global ambitions. And we will be trying to get into some sort of shop and shop kind of retail globally as well. Before going into EBOs in the global, our focus is definitely India, but we will be keeping on trying to get global in the next 1-2 years.
Well, Shubhika, we're going to have to leave it at that, and we wish you the best with your venture. Thank you very much for your time here on CNBC TV 18 today.